Up YouTube, it's Flex and Joe. I'm back from my workout tonight and I got a quick video for you guys. And what we're going to be talking about today is this little indicator in the top left of my screen called the ATR. So let's get into it. All right, so ATR is the average true range. So this indicator is set up to define what is the average true range over a certain period of time. So on these charts, the way this indicator is set up, we'll go into the studies and we're looking up the ATR study. So this is set to a period of 20 days. I have set mine to 20 days because 20 days is the last month. It's the last 4 weeks of trading. So obviously it's a rolling period, and 20 days ago is going to drop off tomorrow, and then we're going to add in tomorrow's range and so on and so forth, right? It's going to be a rolling period. Most people have this set to a period of 14 days, which, I guess makes sense. Logically, 14 days is 2 weeks, but in trading days, 14 days is just under 3 weeks. And I personally like to see what's the last month of trading been like, and that's why I have mine set to 20. There's no right or wrong way of doing this. It's really a matter of personal preference. I believe the most common way is to use 14 days, and if that's what you choose to use, then that's fine. So the ATR itself really is a technical indicator in trading to measure price volatility. It's going to calculate the average range between the high and the low price of the asset, whatever the chart is set to, over that specific period that you defined in the study settings. Typically, like I said, it is 14 days. We're going to give credit to the person who developed it here, which is a J. Wells Wilder. J. Wells Wilder. Can't speak tonight. But that's the original developer of it, so we'll give credit to him for that. It defines the ATR in either like the price or pips if you're into forex. I don't do forex, but in VIX isn't exactly dollars, right? But same difference because there's no buyers, just like there's no buyers and sellers on VIX or on something like SPX. Like there's no actual volume. You don't buy the SPX, right? It still shows in terms of just total units. Okay. It does not indicate price direction. It only indicates the degree of volatility. So in this top left here, you see DTR. So that's the daily true range. So that's today. So if we're looking at this VIX chart, what it's saying is that for today, the range was 3.16 versus the last 20 days average of 6.96. I believe if I get tricky with this, I might be able to zoom in so that's easier to be seen. Can I? Yeah, there we go. That helps a little bit. So you can see 3.16 versus 6.96. All right. So let's measure that on the chart so you can see exactly where that number came from. If you look at the high of day here, which occurred in pre-market, and then the low of day, that's where you'll see the little box pop up. Oops. There it is, 3.16. All right. So all that is saying is that compared to the last 20 days, VIX was only 45% of the range that we've seen in the last 20 days. So this is a relatively tight consolidation type of day. If we were to look at the daily chart, for example, we would see that too, that today's candle was a doji candle, right? So you can just like eyeballing it, you can see we've had some really big days, and then today was a very, very small day, which makes sense, of course, too, because the VIX expiration is tomorrow, and so there's probably a lot of factors in that. And there wasn't a lot of news or things that would drive volatility today either. So how could you use the ATR? The ATR is great for understanding volatility and understanding how much an asset typically moves, and then setting realistic expectations about potential price swings. So you could use the ATR for placing your stop loss. Let's say, for example, you were trading a breakout and you didn't want to necessarily get faked out or like wicked out, you might set your stop loss for double the ATR below that breakout level. This is not my trading style. It's just a typical example, right? So, for example, if we were going to, let's look at another chart. Let's look at Tesla, right? And we'll go down to Tesla on the daily. So you can see here that Tesla's ATR currently over the last 20 days is $22.50. Okay. So let's just say for argument's sake, we were breaking out of this level, basically 275. And you wanted to get in on this breakout. He said like, oh, there's a downtrend here, blah, blah. If we break out over this level, whatever your thesis is, it doesn't matter. And none of this is financial advice. Do not take financial advice from a guy who literally flexed his biceps at you in the first 5 seconds of the video. That would be dumb. Okay, this is for educational purposes only. So look, if you just say for whatever reason that's the trade you want to take, right? And so if you were using this ATR at 22.5, well, what would you do? You just double that, so it'd be about $45. So you'd put your stop down here at about like 230, and you say, okay, like I'm taking this, I'm buying this long breakout, and whatever your targets are, maybe it's like up here in this range before we had a big leg down, whatever, and you're gonna put your stop at 230. So that's a way you could use ATR. The other way you could use ATR is on a stock that has news. So let's look at this stock today that had some news. I didn't trade this, but this is Rocket Lab. So, let's go to like a little bit of a cleaner chart. There we go. So Rocket Lab had some news this morning, and you can see it gapped up from the prior day's close. And so it had a very bullish candle here, another bullish candle here with increased volume, and then 2 lighter days of volume. And then on this third day, you can see it tried to gap up, but it pushed down and then it held the golden zone of this, large range day, right? And this day's range right here was $4.19. The ATR is $2.04. So this was a double ATR type of day. And that is also one way you could use the ATR, is that if a stock is really moving, you would trim some, and I'll get into that example at the one ATR mark. But then you could also be sure to trim some at like maybe 1.5 and 2 ATR, right? Especially this is for, in this example, it would be for, day trading or some small swing trading, holding overnight position or whatever, right? So today they had news, they were gapping up. And if we go back to the 10-minute chart, what we see here is following the gap up, right? They start to break out. Now, if we look at this move from the low to the high, that's where we see $2.33 plus 2.33. That is the day's range, right? Because from the low to the high, it never, after this move, in the first 30 minutes, it never broke either of them. It just literally like fell down, faded, and was just done. Had this late day curl push up, but still didn't break out in terms of the ATR. So on a stock that has news that's being day traded, obviously a great target is to scale at the ATR, which it would look like a lot of people did, because if we were to draw this 2.04 over the last 20 days is boom, it's right here. Let's change this study. ATR study. Let's change this to 14 and see if the ATR changes much. No, it's 2.06. So it really doesn't change all that much, but you can see here's the first 2 candles of the day, and look where the primary selling occurs, right above the ATR. So that's a fantastic place to take profit. So knowing what the ATR is, once you see that this starts to turn red, which this particular indicator will turn red, I'll share it in the description box below if you want to use the same exact one. Just remember to update the period to the time frame that is appropriate for you, that you want, right? Again, I use 20. But this one will start to turn red, I think, over 90%. So like you could look at this and say, all right, like I'm in this, I'm in this from the bottom, etc. We're approaching 90% of the ATR. I probably should trim some off and lock in some profit. Might be, something you would do. Another thing that the ATR can help you with is adjusting your position sizing. So whether you're scalping, day trading, or swing trading, right? Or even like long-term position trading. When we're in periods of higher volatility, which the VIX is extremely helpful in understanding when those periods are. When we're in periods of higher volatility, you probably want to size down to help you better control your risk, right? Sizing down in higher volatility environments will allow you to have a larger stop loss to account for that volatility while still risking the same dollar amount. It's really key that you understand what the volatility is like at this point in time versus other points in time, right? Right now, with all the tariff news and everything else that's going on, and just in case you don't see the bottom right here, it's April 15th, so it's mid-April 2025. All the tariff news has got the volatility going crazy. If we look at something like the NQ on the last 20 days, I mean, you see that this is already updating for tonight's session. The last 20 days have an ATR of 718, which is insanely high. It is more than double what it was just a couple months ago. If we actually adjust this ATR down to 14, I believe this is going to go up even more. Yeah. So the last 14 days, which again, most people are using a 14-day ATR, that shows an average true range of 784 points. So there is a range from the low of day to the high of day, 784 points. That's insane, right? Once upon a time on NQ, catching a 100-point move was great. Literally, there have been opportunities to catch 500-point moves. I caught a 500-point move on NQ just last Wednesday. Absolutely insane. Don't know if I'll ever top that. That might go down as the all-time high, biggest NQ trade I've taken a single day. And that's totally fine, but that's absolutely crazy and should not be looked at as like something that I can repeat, right? Let's look at ES, for example. ES, the current ATR on ES is almost 189. Again, at once upon a time, the ATR on NQ was like 300. And this ATR was sub 75. So extremely volatile environment that you want to be prepared for, and you want to make sure that you account for potential larger swings in price action that might inadvertently stop you out that you're not prepared for, and then you take the stop only to see it move in your direction, and you say, if I only would have had size down and had a little bit of a wider stop, I still would have been in this trade. It would have been a winning trade. Now I took the loss, right? So that's where ATR can really help you. Again, the ATR can also help you with trade timing, right? So for, larger positions, longer positions, swing trading, etc. You can know if the ATR, the volatility is unusually high or low. It is also important to notate that the ATR may lag during sudden market changes, as it's based on historical data, right? So if, for example, we put in like a 500-point day on ES, right? This ATR here isn't going to change until the day ends, and then it'll update as a reflection of part of that period that you're measuring. It's definitely one of those things that's most effective when you combine it with other indicators or strategies. It's really a critical tool for managing risk and adapting trading strategies to an asset's volatility. It can help you, and it will help you make more informed decisions, in a dynamic and changing market, which with the tariff news is exactly where we are now. Another thing the ATR might do is suggest at a glance that you're in a consolidation phase, which you would probably see on the chart anyways. But if we notice that a chart is really starting to coil down and that ATR is shrinking, it might suggest that a larger move is coming. There is an example of this on Tesla that I also can cover, and that happened in here. So I don't offhand just know exactly what the ATR was approaching this time frame, right? So like I don't know what the trailing 14 or 20 day ATR was in here, but you can see there are a lot of like larger candles, right? You have this one, you have this one. I mean, this is a range of 12, this is a range of 23, this is a range of 15, another 9, another 10, right? And then look at these ranges here, right? This is 9, 8, 7, 4, 4, 3, 4, 4.75, 3, and then a 6.61, right? So like this weekend, this was a trade setup that I took, ahead of earnings, but you see there was more volatility, more movement here, and then these candles are really, really starting to condense, indicating that something bigger was brewing and coming. And of course, earnings was coming too, right? But if you look at just this entire range for 9 consecutive days, Tesla traded inside of a 12-point range, and the ATR was probably about 12. So like across those days, it was really just pinching. And you could see that on the chart looking at it, that something was brewing, something was coming. And then, of course, what happens? Explosive price action, 19.5 points, 14 points. And then, again, it just drifts down. Those candles get tighter, and then the election comes, and boom, it's off to the races, and you have a 31-point day following big gap ups, right? So that's just another way you could use the ATR. Different platforms have different ATR indicators. And this is the NinjaTrader platform, which has an ATR indicator that you can update based off of whatever settings you choose. So if this particular indicator is literally showing you like what the exact range is per candle. And so when we have periods where, the candles are moving with broad range, the volatility, will spike, and you'll have these little blips, these little dashes that move up higher. All right, so like in this example here, you can see that the ATR indicator, what it was showing you based off of the first part of this day, and this is the tariff pause news. So on the day of the tariff pause news, you can see that like there were some really volatile candles. It's just crazy to think about. This is a 200-point candle, right? And so you see that volatility is overall starting to trend down. It's starting to tighten, and most of the candles are hovering between, a 30 to 60 point range, which is still very insane, but pretty pretty large, but you can just see where they are as a whole. And then you have the bond news candle here that occurred that was 153 points. And then all of a sudden, you get this 630-point candle when you hear that the tariffs are paused. So that sudden surge in volatility and seeing this, on your chart and this huge spike up, again, would impact your trading and the decisions that you're going to make relative to your trading, right? The cool thing is that you can change this ATR indicator to suit your needs. If you're on NinjaTrader, this is just ATR, right? That's literally what it's called. If you were to scroll through this list, called ATR, you can set the period. So the period is set to 1, and it uses the input series, whatever chart that you're on, right? So you could change it, to be on daily or whatever. It calculates based of the bar close and the maximum look back, etc. You could just, again, play with these settings, right? Primarily when I'm trading, I have this indicator relatively scrunched down. And what I'm mostly looking at here is how much have the candles been moving in terms of their range without having to like physically calculate them all. I can see roughly, okay, right about here, we're hovering in like the 25 to 45 point range. So that would help me determine roughly where I should try to target an entry, where an appropriate stop would be, and what my appropriate target should be. So if we go back in time, right, like to a couple weeks, not even a couple weeks ago, but like last week, even before the tariff pause news came out, we're looking at the chart here, right? Like a lot of these candles are moving 50 to 100 points. So, it's not unrealistic to say, okay, well, I'm going to get in here with a 50-point stop and a 100-point target versus a day like today. If you got into a trade and we can even just look at the chart and you can see something like, let's just say you went long off of VWAP here, right? A 50-point stop, if you're hopefully trading micros, not minis, a 50-point stop is relatively close to low day. Okay, that makes sense. It could make sense. But then a 100-point target is, just barely up there, right? So you would just barely nick that, in this situation. Whereas last week, you'd hit that in like a candle. right? So this week, or today, this would take you like over 30 minutes, and you'd be sitting through a lot of chop wondering, is this really going to hit? So hopefully that makes sense, right? I just look at it in terms of where are we and how much are we moving usually. You'll typically see too that the range, like on a day-to-day basis, the range of the candles, starts to condense as we get into like lunchtime and price action slows. That makes sense. If you watch charts enough, you don't need an indicator to tell you that. But it's good to see too, okay, well, I'm taking a lunchtime trade. What have the candles been moving like in the last hour? And you can see, all right, through like maybe if we look at like this period here, if we look at like from here, which is what exactly? So let's just say we go from noon. So noon, we see from here about 17 to 1 o'clock. So the lowest it moves, you have a range of about 12 points to 40 points. So that can help you saying, all right, well, I'm taking a lunchtime trade when things are slower. How have things been moving this lunchtime period? And here's roughly what my stops and targets could be. So hopefully that helps. Hopefully I answered a lot of questions and gave you guys some valuable information. Shout out to Trevor. This video would not be possible without you, Trevor. I appreciate the funds for caffeine. And if you guys like this, please give it a thumbs up. Don't forget to subscribe, and I'll see you all in the next one.